to the marketplace here. Now, we know that oil makes up a big chunk of inflation. Single biggest contributor to inflation that we have. Single biggest contributor to inflation that we have. But so that's oil. Take a look at natural gas over the same period. Right? Natural gas. So perhaps this is what Powell's focusing on, is this difference of opinion that we've got on the commodity space. Perhaps Powell's looking at this oil price as being a geopolitical construction rather than an inflation demand supply narrative. If that's the case, then Powell's comments would seem to be accurate, and therefore we could recognize that there's a very good chance that oil prices might head back towards where the natural gas market is. Yeah. So these are the kind of things you've got to remember, that there's more than just oil prices. What about copper prices? Now, herein lies the problem. Take a look at copper prices. Uh-oh, copper prices are going nuts, aren't they? Copper prices are ballistic. So there's a problem there. But let's then now take a look at wheat prices. Let's take a look at wheat prices, yes? So we can see that some commodities are really, really, really cheap, and some commodities are really, really, really expensive. And obviously, if you average these out just as a single average, then it pretty much puts inflation about there, doesn't it? On average, since 2024 began. Now, obviously, you can construct this as a weighted average to construct your own inflation model. But obviously, if you're looking at this from an RINF product point of view, oops, it's oops, that's an indicator, you got it. RINF. So you can see that RINF is inflation expectation. So Powell's obviously paying a lot of attention to this. And you can see that according to the inflation expectations, we're kind of in the middle of zero land here, aren't we? Kind of middle of zero land. So Powell's obviously looking at that picture, not the oil picture. And obviously at the moment, Powell must be expecting this oil price to be selling off here. Now, obviously there's that storyline, isn't there? That's part of the underlying storyline, is the big picture inflation narrative. But we've also got other things that we want to be able to take account of, right? What are those other things? Well, 5-year linkers, of course. And when we look at 5-year linkers, the idea is that we want to see what the 5-year linker is telling us in line with inflation expectations, right? Because this is the actual traded guys here. Well, if we take off inflation, if we take off wheat futures, if we take all the commodities off the chart, and we look at the 5-year linkers against inflation expectations, which one seems to lead? Which market seems to lead the markets? The bond traders, right? So the bond traders seem to be able to lead these markets here. So they started to sell off that top edge, and then all of a sudden inflation expectations dropped like a stone. And then from this point, they've obviously been going back up again here. And obviously what's happened is that commodity inflation expectations have found a pivot bottom edge and started to rally back into price now. But it still, to me, looks as if they're massively discounted against this underlying 5-year linker market. Massively discounted, right? So when you look at that, you're saying to yourself, well, what does that mean? Well, it seems as if the linker market seems to have a good grasp of what's happening in copper prices. You know, the linker market seems to have a good grasp on what's happening on oil prices. And obviously oil's the main one for my linker market, because oil is the biggest contributor to inflation that we've got. You know, so we can't dismiss this. So when we're looking, for example, at natural gas prices, you can see that natural gas prices in the linker market agrees here, but natural gas prices in the linker market completely disagree here on a macro chart basis. Natural gas prices and wheat prices disagree completely here as a possible inflation narrative. So this is what I'm saying. It's confusing. There's a lot of things positive and a lot of things negative about this whole storyline. Powell's obviously chosen to focus on the broader picture instead of oil, and he's probably doing that for one reason. He probably believes that things like the Red Sea and the Ukrainian situation, for example, might eventually resolve themselves. And if they do, of course, oil prices can start rolling back down again. So I think there's a geopolitical component to this storyline, guys. I don't think it's just as simple as what we're seeing. Anyway, my inflation sell trade is doing well. JP Morgan sell spreads 8,500 down to 7,500. So we've done another $1,000 on that spread today. Thank you very much. I like $1,000 paid in. Should really think about this trade, Ab. It is an absolute ripper of a trade. Should consider putting it into your portfolio.